Alrighty. Hey, everyone. Welcome to this month's episode of Cracking the Case of Homeownership. I'm Amber Spiecher, and obviously that is not Josh Wheaton over there. That is Phil Stevens filling in for Josh today. He got taken away on a special assignment. So we do have another professional over at Simplified Mortgage here to kind of get into the nitty-gritty today with us. And yeah, so Phil, what did you want to talk to us about today?
Um, the topic of today's discussion is going to be current state of mortgage rates, sort of what is the outlook on mortgage rates for, let's say, the next quarter to 6 months. Obviously, we don't have a crystal ball we can look out too far. And then really, what does that mean for those that waited to buy a house or maybe wanted to get in the market but didn't quite know? We can get into the cost impacts. Are you saving money? Are you not saving money? And go from there. So, if you want me to jump right in, we can jump right in.
Yeah, I mean, that's what the folks have come for. They're always looking to learn something. So we might as well, see
Excellent.
what it
Well,
has for you and go shopping.
yeah. So to get started, the state of the interest rate. I know everybody's sort of eagerly anticipating rates getting back into that 2 and 3% place, but a lot of things have to happen in order for us to get there. The good news is that if rates don't get back there, it doesn't make homeownership not worth it. There's a lot of bonuses and upsides to owning a home in the long run, even if you can't get a 1.875% interest rate. But the big question I think on a lot of people's minds right now is when are rates going to get back into the fives? That's like that nice little comfort zone people have when they see a five handle is like, okay, this is looking good. And in normal times, we would be there. I'm not going to bore you to death with bond markets and things like that, but every indicator in what existed pre-pandemic points to rates, should be and traditionally would be back in the fives. But today's investors in the markets that do drive the rates, they're still a little weary of what's happening in Washington and how volatile things are. So they're a little standoffish with where they're parking their money. And those guys are typically pretty smart with where they park their money. But the good news is that the big headwinds are out of the way. The things that were standing in the way of rates getting lower, inflation, things like that, those all show signs of coming down. And I don't say the worse off the economy is, but typically lower mortgage rates are going to come when things aren't like white hot like they were for a long, long time. Does that make sense?
Yeah, it does. It's like we have to have that symbiance, that balance there. We're
Yeah.
kind of trying to get back there.
Yeah. Yeah. So the good news, like I said, is the major headwinds are out of the way. The signs have shown that inflation is sort of cooling, even though you and I look at like what we're paying for at the grocery store and keep in mind we look at inflation year over year, not necessarily this year to 3 years ago, while we know costs are up. Um, there still is some rising costs, but overall, how they weigh inflation and how they calculate it, costs overall are coming down. You may have even seen, price at the pumps a little bit better right now, sub $3 for gas, and that goes a long way when factoring in inflation. Energy costs play a big role in that. So if gas is low, mortgage rates should be coming down with it. That's a little cheat sheet the watchers
Right.
can look at. If
Not just at
gasoline's
Buc-ee's
low,
and BJ's.
yeah, yeah, you can expect some lower mortgage rates in the horizon when gas prices are low. Um, those are the big things I would say, the as far as expectations of a number, we can't really put a number on it. Can't really, say by March rates are going to be in the fives. But if things continue trending the way that they are and the markets respond the way that they typically do, we can expect to see some drastically improved rates over the next couple months.
I mean, I think that that's good and bad because I think if we see rates improve too quickly, we're going to see a huge influx of buyers back into the market, and we're not going to have that buying power and that negotiating that we're seeing coming back now because we had kind of lost that for a couple years. And it's been kind of nice to get back in that as a real estate agent, like to be able to, negotiate and feel like you're truly getting your buyers a great deal, not just the great house that they want, but you're getting them a great deal. So, it'll be interesting to see how quickly the Feds kind of let that adjustment happen.
Yeah. Well, there's two important topics that you mentioned there. And one, from a buyer sentiment perspective, I worked with a lot of home buyers. I know you did too, in early 2020 and 2021 when things were just white hot, like 30 offers a house. Um, in that time, a lot of buyers told me they kind of felt helpless, and realtors too, like you said. I mean, there's no trick, necessarily. There's no it kind of it levels the playing field from a skill perspective and season. It's sort of, pick one out of a hat. There you got your options. And I had a lot of buyers who went a long time not getting offers accepted, and having to offer on multiple homes and missed out on some homes they really love. So the silver lining to those buyers that that did purchase and took higher interest rates, that old saying, marry the house, date the rate. And it's true. They didn't have that. They had seller concessions paid. And you're right, when interest rates, every point they drop, it introduces nationally about 5 million more qualified home buyers into the marketplace, which is, if builders can't build them fast enough, which is law of supply and demand, more demand, low supply, prices go up. So you got to sort of choose your misery in that case, right? Is It's going to be, you're going to pay a low interest rate on a high price or a high interest on a lower price. And eventually, and like one of the things that we'll see, it may not make a huge difference.
It's
But
funny. I was speaking with a girl that I helped her purchase her first home a couple years ago, pretty much at the height of it. She called, wanted to see a home. I called the listing agent. She said, "Okay, but we're reviewing all offers in 2 hours because we had multiple offers." So we got in, we saw it right away. She fell in love with it. So while we were standing there at the home, she had called Simplified Mortgage up to get you guys on the phone to get the pre-approval because she'd already started the process, but she hadn't gone all in yet. So to get that, so we could have the strong pre-approval that says, "Hey, like this person is good to go, like they're solid." And then we've got that offer in. I texted the offer over to the agent and was like, "I have a 30-minute drive home. I'm going to get it written up to you. Here's the pre-approval. This is our offer." And she won it, which was
yeah,
pretty awesome. But we were out shopping with her friend this weekend looking at homes, and her friend's very hesitant, and she's like, "Well, that's because you're able to like kind of choose." And then we found a home, and they want to have their closing costs covered. They don't need to, they want to. So they're like, "Well, that's kind of our point." And I was like, "Yeah." And but it was the previous buyer that brought it up. She's like, I see it, it's two different markets. I had to go all in, and thankfully I'm a strong believer in appraisals. And so her home appraised. She didn't overpay for her home like some people felt like they were doing. We had our inspections, all that fun jazz. But now her friend has time to go home and think about it. Let me know tomorrow, and then now we put the offer in and we got a counter offer. So now we get to kind of negotiate, and the nail biting lasts a little bit longer rather than just the multiple offers of, will they accept mine? So
yeah.
yeah.
Well, it's a good point that you brought up, and the value of a strong pre-approval and a strong loan officer, in separating yourself from the pack. It's one of the things I know I do, Josh will do, when we say, "Hey, we're putting an offer in, the pre-approval," we'll either ask, include me on the email when you send it. That way, we can chime in and we can vouch. They know they have our contact information. We like to proactively reach out to the listing agents to say, "Hey, here's who I am." I've got a nifty tool, we call it's our track record, that it's a PDF that shows, the volume of loans that we do. So they know, all right, I'm getting in with a loan officer who's on a deal or on a transaction. Is at the end of the day, their concern is this thing going to make it to close, right? They don't want their sellers to have to put the house back on the market and go through all that headache. So they want to know if they accept an offer, we're going to get to close. And having a realtor, one that is good at communicating, and also a loan officer to make that team to really you know show how strong that offer is going to be important in the coming months. Once we get into the end of the first quarter, I think is where that market you were talking about, where it's best and highest by Sunday at 5. And it's like
Yeah.
we're right back there. So
And on
um
the consumer side of that too, like yeah, buyer doesn't want to go get a pre-approval or just like a basic, oh, I typed in some numbers, now I have a pre-approval, because okay, great, then I can go get you under contract, but now you're going to pay for inspections, you might even pay for an appraisal, you have fees associated with buying a home.
Mhm.
And if that's not solid, then you're going to be out that money. Like nobody can give you that money back. Most likely I can get you your escrow deposit, which is kind of your like what you give good faith to the seller to hold on to you. So we can build that into the contract, but I can't build back giving you back inspection money, appraisal money, survey money. Like there's money that goes into it. So that's, you know, on the buyer side too, always keep that in the back of your head of okay, well, I want a solid loan officer, one that speaks to me, one that also is going to be with me throughout the process, not just hand me off to the next person there. And I really
Yeah.
like that about y'all's company, that you do have other people that work on the loan, but you as a loan officer are always available for me or the buyer or the listing agent to get a hold of.
Yeah. Well, to that point real quick, and I'll move us on to the next topic. To that point, like you said, we have multiple people that work on the loan, and that's just about efficiency, and that's really the to make sure that things move from one section or one milestone to the next quickest, because there's a lot that goes into, originating, and not to, bore people to death, but we want to make sure that if people need to be communicated with, that there isn't something sitting there, that there's somebody that can and should be taking care of that section. So that's how we do get, make sure we get things to close in less than 30 days, or at least in 30 days, whatever the contract is. But talking about rates, I know that was one of the big topics is what's coming
Yeah.
up. I know the headlines everyone's seeing is, the Fed cutting interest rates, and that's going to play a big role in mortgage rates. Like I said, there's little market indicators you can look at that are going to tell you, what, rates are doing, or are rates coming down. The big thing right now, and you had mentioned prior to the call, is, rates before, at the end of the year to now, and we sort of had this like this since the beginning of the year. Um, and the reason is the economic reporting that we get is how good is the labor market right now? Well, we just had the holidays, right? We had Black Friday and Christmas, and people hiring seasonal workers, and those numbers don't really get adjusted well for those. So the numbers that we're getting at the end of the year and starting this year for November and December is we've got this really hot, labor market, which we know maybe not quite true, a lot of part-time work or seasonal work. So that's creating the sentiment of like, well, should we cut interest rates yet? From the Fed, should we hold off? Um, and that's what the market is sort of like, waiting to see. They don't want to, price in, they call it, a cut in rates, and then it doesn't happen, and then investors are losing a ton of money. So they're sort of keeping everything at arm's length. So we've seen a little bit of a give back, and you expect end of December, beginning of January is good, but since the beginning of the year, we have this it's a downtrend. They're not lower, as far as what rates are doing, but there's sort of still some uncertainty and instability. So if you're on the fence, I would say, and you're curious, speak to a loan officer to talk about what's going on. But two, they don't let that concern you, because whether they go a little up or a little down, they're still better than they've been in a long, long time. So that's definitely a win for buyers in the market.
Definitely.
So what other questions can I answer for you? I know anything that jumps out from clients ask you, or maybe you were showing some houses and somebody had a question you want me to touch on before I kind of show this comparison?
That the rates and like the payments have just been the biggest thing for people of well, if I do this, well, but I don't have that much cash. Can I get closing cost assistance? Oh, but I want a lower rate, a lower loan instead, so they just kind of, and then there's all these online calculators for mortgage calculations.
Mhm.
And, it's hard. I try to say, I need you to speak to your loan officer because they are so much better at it. And like, you guys go in more detail. You'll plug in like the actual taxes or the actual estimated what would be a realistic number for your insurance around here. And I found a lot of those online, either they estimate way low, especially for here in Florida, or they don't even take those into account. So then people are, their payments, not double, but like a third higher than what they were thinking. So
Yeah.
It's just important to make sure you're reaching out to the true professional. It's just like the media. It's not everything you see online is
Oh
true.
yeah. Yeah, there's always a narrative. And shameless plug for you, if you go on my Facebook, you'll see January 30th, I think it's a Tuesday night. I'm doing an evening first time homebuyer Zoom call like this one, free. If you have any first time homebuyers that may be watching this, or people that know people who want to be first time homebuyers are watching this, there's a link on my Facebook page where you can sign up, register, and we're going to talk all things first time home buyer. What is my payment? What is my payment made up of? How do I lower my payment? What levers can I pull to get a lower payment when I look at, the how much I'm borrowing and the interest, things like that. Um, but like you said, with like the cost of waiting. So here's really the comparison. You were building, this is in Volusia County, and annual property taxes is sort of estimated on here, but there's two scenarios here: 415,000 or $400,000 house, $416,000 house, putting 20% down, with the different interest rates, 7.125, which is a lot of what we've seen coming into the end of the year, versus possibly waiting in 3 months, 3 4 months for rates that they go down a full point to 6.125. And again, there are estimates on here for whoever's watching this. This is not exactly what you'll pay. Again, taxes and insurance are going to be a little bit different, but you can see here on the same loan amount, that full point waiting a couple months can save you $262 a month. That's not nothing. That's right now that's a few tanks of gas, a little bit more food at the grocery store. So
Yeah,
yeah,
half the grocery cart,
yeah,
maybe
yeah, for
even a
sure.
quarter.
Yeah. So, and over time too, over 7 years, you're looking at a total savings of 28,000 in interest. You've paid, more towards principal. You're making 6 grand and 29,000 less towards interest. So that full point, it's like, again, well, it's like, oh, well, $262. I mean, that's, there's a lot to gain by paying that much more as far as, appreciation over time. But in 7 years, all things being equal, you're coming out ahead. So that little bit of waiting, can really be advantageous in the future.
Definitely. And I guess to that point too, I'm seeing more people kind of choosing an FHA loan over a conventional loan, even though like they would qualify for conventional. Can you kind of speak to why somebody might choose that?
Yeah. Really the loan program like that, an FHA loan versus a conventional loan, there's a couple different things that are going to be impacted by this. Usually an FHA loan, a government-backed loan, is going to carry a lower monthly interest rate, or annual interest rate. That's attractive to people, right? Well, why would I pay, 7.5% on conventional when I can get 6.5 or so on FHA? And that's a great question. On the surface, it's, yeah, I'd much rather pay, lower interest. But there are differences with those loan products. And again, depending on credit and income, down payment, and things like that, that little bit of an interest savings might not equal the monthly savings that you think it does. And the reason
Okay.
is for a sneaky little thing called mortgage insurance. Any loans with less than a 20% loan to value, meaning you borrowed more than 80% of what you needed to cover the cost of the house, are going to carry mortgage insurance. But if you go another layer down, and this is where I don't want to get too nerdy, it's how they calculate how much that mortgage insurance is going to be. So with a really strong credit buyer in 3 to 5% down, that monthly mortgage insurance factor may be lower than the same down payment with a lower interest rate on an FHA loan. So what you're paying every month, if you total them up, principal and interest, there's going to be a little bit of a difference because you're borrowing the same amount at a higher interest level. But what you're paying monthly in mortgage insurance could be significantly less on a conventional loan versus an FHA loan, meaning the payment is the same. Um, there's other advantages that we don't won't get into now, but it also may make sense to choose the FHA loan in that sense. If you're going to do a minimum, down payment, it might save you, $60 to $70 a month on your payment. And for 2 to 5 years that you're going to keep that loan, that can be a lot of savings before you refinance it and get into a conventional loan to ultimately drop that mortgage insurance over time.
Okay, that definitely makes sense because it's just always had to kind of baffled me when people bring that up, and I'm like, well, yeah, I guess you kind of got a point because it is, almost a percent lower a lot of times, but it's it's also you're even if your payments end up the same, you would actually be paying the conventional loan off quicker because more of your payments go into your principal too. So
Yeah.
definitely
Yeah,
talk to your
over
loan
time.
officer.
And like anything, it's the first 5 years is sort of like, yeah, the 2 to 4 years
Here's
is
some
like
crumbs
just,
towards my principal.
yeah. You really don't start seeing that change from what you're paying every month in your principal and interest payment. And for those that don't know, when you make your payment every month, and there's different buckets of things make up your payment. When your principal and interest chunk, let's say, is $1,500 initially, it might be $1,200 towards interest, $300 towards principal. And over time, it goes like this. And you're still making that $1,500, but now 1,000 towards principal and 300 towards interest over the life of the loan. The bank's going to make sure they get paid back first. That's one of the things there's a reason their buildings are bigger than our houses, is they're going to make sure they get paid back first. But yeah, again, for anybody watching this, if you want to dive deeper into, that's what we cover in that first time homebuyer class. What are the different loan programs? What makes them up? Um, Other things, credit worthiness, things like that all play a role in becoming mortgage ready. So, yeah, if you're looking to it, it's going to be a great time to buy, in my opinion, in the next couple months before things might get, potentially get too crazy. It's going to be a really good time to buy.
I really appreciate you filling in today, Phil. If you guys need anything, mortgage wise, refinance, anything like that, even Phil is your go-to. Definitely reach out to him. We'll have his contact information in here too. Other than that, did you have any closing thoughts?
No, just like you said, if you have any questions, and even if you don't think it's on the near horizon, oftentimes homeownership's a lot closer than people think. So if it's something you're curious about, reach out to you or me, talk about getting a consultation. It doesn't cost you anything to talk. So, but waiting could cost you in the long run. So I appreciate the opportunity to fill in and pinch hit for Josh. Hopefully I filled his size 9 shoes. But no,
Definitely.
it's
Yeah.
good to see you and good to talk to you again.
Yeah, you too. And thank everybody else for joining in on this month's episode of Cracking the Case of Homeownership. We'll see you next month. Bye.